Who's the Boganer? That book? Is that somebody's autobiography?
Nathan Tinkler.
I don't know if I mentioned last time. He owns one of the great one-liners when he's had somebody from Four Corners or someone up in his face trying to get a reaction out of him. He goes, "How's it feel to be broke, Nathan?" He goes, "A lot of people would like to be as broke as I am."
That's fantastic. Money Miners, we are going to try something new, and this is take 2 because we've got to record the first time. We have we've got a brand new style of show that we're very excited to share. We're going to be talking about the biggest news in the industry from this week. We've got stories about the lithium world. We've got stories about South32, talking about that Hudbay deal with Mitsubishi, and a whole bunch more that we're going to fire through.
Sam Berridge is joining us as our guinea pig as we experiment with this new style. I'm excited, mate, because we've got segments. I love segments. Segments are fun. You say the thing, and then you're like, what do I think about it? Yep. I thought this.
That's We've got a rating section, so you're going to get punchy responses, and we're going to pick through a lot of the big drivers behind the decisions being made in our industry. And like you said, mate, with none other than Sammy B.
In the comments below, give us your grade control of what you think of this style of episode. JD, we've also got some news. We're looking at the calendar ahead, and between the 3rd and the 5th of September, next month, a couple of weeks' time, we've got the Africa Down Under conference
ADU
here in Perth. You and I are going to be attending that one. We hope to see some of the money miners there. This has become like quite an event. Like Paydirt have put this on for many years now. It's grown into this is the premier occasion that you get literally Africa in Australia. It's Africa Down Under, but it's the mining investment comes together, and you get a really good diversity of people from different backgrounds. Government comes together with investment capital, and you get a great perspective into what's going on.
And mate, we saw the ratings come out on countries you want to invest in. A lot of those ones are in Africa. You want to be there. So we've got companies from explorers through to developers, through to producers, as well as delegates and a whole bunch of people from these countries. So you can learn a lot from going to a thing like this. And if you're in the market, be it an investor, a service provider, you want to expand in the industry, it's a perfect place to be.
It's well, we're going to be there, so obviously, and we hope to see you there too. Links are in the show notes if you want to come along with us. All right, mate. Let's
tuck in.
Sammy, thank you so much for coming and sitting down with us today. We're doing something a bit different, and you have kindly accepted our invitation to join us for a type of show, a type of episode that we haven't done before.
Absolute pleasure, guys. I mean, you guys could open an envelope and I'd come and have a look at it. So there's no problems at all.
No anthrax in this one.
We've got a bit on the shopping list today. We're going to start with 3 of the biggest stories in the mining industry. And first and foremost, lithium. This one we can sort of tackle it in a few different ways. But we get this news that Albemarle perhaps has a couple issues. Rumours sort of spread through the market that their La Negra operation in Chile is being paused. Nobody kind of knows. You see lithium futures in China limit up on a couple of days earlier in the week, and then they come out and it's a bit of a non-event, but it was on the back of cattle pausing in Jiangxi, their operation for 3 months, and you get quoted in the AFR saying you're actually looking to trim holdings, which was a bit counter to what the market and what other people had sort of said. So how did you weigh up all this news this week?
Oh, it's when you get, there's news snippets for, various commodities pop up almost daily, and it's all about assessing the materiality of that announcement, to the size of the market you're talking about, and whether it's going to be a blip or whether it might be, oh, hang on, this is a real inflection point here. When that dam collapsed in Brazil for iron ore, that was an inflection point. Whereas a 3-month sort of hiatus from one of the lithium producers, albeit a big producer, I don't think that by itself is enough to put a bottom under lithium prices and get spodumene up to a level that's being implied by some of the equities at the moment. So yeah, it's when you're dealing with a quite a boutique market like lithium, it's only 1.5 million tons. Like, it can be pushed around very easily by financial flows and even the existing market participants deciding to restock a little bit. All of a sudden you can have sort of apparent demand go well ahead of supply, whereas absolute supply and demand, if you take out the swings in inventory, still looks like it's pretty comfortably covered. Like in terms of supply is pretty comfortably covering demand. There's still more supply coming out of Africa, so yeah, I think it's an opportunity for maybe for a quick turn, and probably the hedge funds who are who are short this industry would have got nervous, and if you have a short that goes the wrong way, it can really, really hurt. So it's understandable that some of them might have covered, but ultimately, are we about to have another big rip in lithium? I don't think so. I'd need to see a little bit more material come out of the market, or see demand, trending a little bit stronger.
Yeah, it's super interesting because we had a very similar event late last year with the pausing of an operation where like UBS broke the news, and one of these cattle operations is going to be paused for 3 months. Everyone is over their skis to buy the stock again, and it turns out in time to be a non-event, and lithium falls from I think 800 at the time back closer to 500, and a few weeks later everyone's kind of forgotten about it. And you tie in what you said there about the price that you back out of a number of these equities, and it's 1,200, 1,300 when we're still in the mid $900 range, like IGO, Liontown, Mins. That's a bit more of a complex calc.
Yeah. Pilbara
as well. Like they've run really, really hard. Like Pilbara's near on doubled in the past few months alone.
Yeah, I mean, but they're all heavily shorted, like these stocks, and I mean, if people have never shorted sort of a company themselves, they probably don't understand the sensitivity of when it goes the wrong way. It's not like when you go long a stock, and if it doesn't work out, well, the position size gets naturally smaller and it sort of self-solves. Whereas at a short position, it's the exact opposite. If it's going wrong, it turns into a bigger and bigger position in your portfolio. So you have to do something about it. So because of that sensitivity, I think you do get some of these upside moves when you get sort of bullish news for the lithium price. And also, I mean, the lithium price itself has ticked up, a bit. But are the speed and quantum of those moves justified by the news itself, like the underlying news, like how much material has come out of the market? I don't think so. But everybody's entitled to their own opinion, and that makes a market.
Yeah, the dynamic with the short interest is super interesting to peel into, because you've got the return of like retail behavior in markets in a very big way, kind of globally again. And the retail portion of ASX market, like a few years ago, was super concentrated on lithium names. Those guys have been asleep for, in hibernation for a couple of years, waiting for the right moment. And because globally, a lot of retail stocks are performing, even though those stocks might actually be, questionable businesses or whatnot. I think some of that's just like following into the ASX market. It's concentrating again in lithium stocks, and in periods like this, valuations, you do your NPV calculation. It almost doesn't matter to what the stock does in the short term in these weird periods of market behavior.
Yeah, and I think for some reason, and lithium certainly falls into this, but uranium had a similar sort of situation. Was that a couple of months ago when the Sprott Trust raised, I think, 200 million. Yeah. Had a similar type event, and since then, the sort of sector sort of drifted sideways to down. Rare earths is another sector where you get these sort of outsized moves in equities, and I think it's maybe there's a bit of a theme there in commodities where China is a material component of supply, like they are in lithium and rare earths as well. Maybe that's that you've got investors up there that are willing to move around the Australian market, a little bit faster than what they are for other commodities where they're not so relevant.
Yeah. I mean, we can't talk about lithium and rare earths there and the news we've seen and not ask you about our government buying stakes in projects. Liontown's the big one. I mean,
ding ding ding. Yeah. JD, we're all shareholders of Liontown.
we're all shareholders of Liontown. So for those that didn't catch it, $50 million went from a taxpayer money into the 300 plus raise of Liontown, and this is just enormous news in my mind. We saw it with rare earths, MP materials in the US, and we're starting to see it more and more in bits and pieces. How do you feel about it?
I don't think it's the right way to go about stimulating the industry. The government has shown itself to be utterly useless at picking winners in this. I mean, I think what was the last big investment? There was some quantum computing thing over in Queensland. The government stuck like 600 million in or something, which is questionable whether we'll ever see that money again. But if the government wants to support the industry, you do it in a sort of a broad brush way. Like, I mean, maybe you can. Again, I think this would be a bad idea, but you could set a floor price for lithium at which you guarantee that you will buy at, and that allows an even playing field for all companies in Australia to participate in that, rather than picking winners. So when you pick winners, one, I think you're at risk of basically just getting the investment wrong, because same reason anyone gets an investment wrong. But I also think it applies a level of discrimination between other companies that don't enjoy that level of government support. But I don't think it's the right way of doing it. But whatever, it's just an observation.
Yeah, was it weird to see? So it was Liontown did their cap raise last week. Then you had it felt like over the weekend there was the news of the cattle mine closing kind of surfaced, or on Sunday. All of those lithium stocks opened up massively. Liontown the most. It was up 20% on Monday. Pilbara was 15%, IGO 11%, MinRes 10%. That was all the opening moves on Monday when we were looking at the focus charts, mate. By the way, behind you there, Sammy. Focused by Market Tech. Check out the charts.
Check them out.
Very, very savvy. But and since then, the latter three have kind of retained their elevated price from the where they were the week before. Liontown's drifted back below where it started. Is that just a function of the cap raise dynamics? It quickly rallied above cap raise price, and then you just have the inevitable sell off that comes after cap raise.
It's very difficult to sort of tease out exactly what the drivers were, because there's a mismatch of funds and entities that all have different agendas and different sensitivities to movements in price. I mean, I think Liontown was roughly 13% shorted at the time, so those guys would have been waiting for a capital raise. It did come. Perhaps they didn't get stock in the raise, and so then they have to cover on market if that was their thesis and they want to get out. So you've got those guys probably buying back, whereas other people may be looking for a quick turn on the raise. I mean, volumes were huge, in the couple of days. So yeah, I mean, it's difficult to predict the way things in the 1 or 2 days after, but ultimately, people look at the value of that company at whatever it is, 80, was it not now 85, 90 cents a share?
82 this morning.
82.
Yeah.
And think, well, when on the call or the conference call, they said they basically bought them enough time out to, I think it was mid 2027, assuming $700 US off the top of my head. I think that's right. Is it worth 82 cents a share for, is that enough time for the lithium sort of supply demand outlook to improve? I mean, and that's a subjective view, and I suppose will be expressed through the share price as we get towards that date.
Yeah. The final piece on Liontown, did you catch the dynamic with the call with Tony O on Gina's shareholding? Gina obviously not playing in, and then Liontown having to issue an apology for speaking on her part. That cracked me up. I think, I mean, it's pretty telling that she hasn't, since the $3 sort of, mucking about with the takeover, partaken in any sort of raising. But
Stand corrected there. She did. We just didn't know about it until the change of substantial that went up yesterday. That's the first one that they've lodged. But she did follow a money in the $1.81 that came, which you can see in yesterday's change of substantial, but that was the only place it was reported.
Yeah, gotcha. Interesting stuff all around there.
Yeah. I mean, I don't think it's a good idea to be criticising, one of your major shareholders in the public domain. I mean, she's not under any obligation to chip into any raising that she wants to be in, but to frame it through some ideological lens of she's pro oil and gas or something in the US. I mean, she's also got, a huge rare earth exposure across her investment portfolio, which is, very central to the critical minerals thematic. So, I mean, she can do whatever she wants. I mean, she's not obligated to do anything or support anybody else. So she'll probably invest. I'm sure she, assesses any investment on its merits, and she decided not to participate. I mean, that's the end of story.
Yeah, I think there might have been a bit of forgetting that she is the owner of 20% of that business there. Keen to talk about South32 next. I think this is a really big story with what's happening at Mozal. So for those that haven't followed this one, you've got the whole aluminium supply chain. The end of it comes out at Mozal in Mozambique, and it relies on a heap of power from Eskom, the South African power company, as well as contracts for power within Mozambique. And interestingly, getting back into the weeds on how this all sort of came about, Mozambique had come out of a long kind of civil war when the smelter is getting started. And at that time, Eskom is producing near on the cheapest energy in the world. And Mozal also gets super favourable settings in terms of royalties, paying only 1%, and favourable tax settings as well. And that is about 25 odd years ago. So we've really come kind of full circle, and they can't agree on a power deal. Firstly, like South32 peels off 5 or 6% on the back of this news.
They say they're going to write down $360 odd million.
Yeah, a bit over 360 US. So it's a chunk. Obviously, it's
going to go
non-cash
care and
write-down.
maintenance from March next year.
Yeah.
Yeah.
I'll put it to you, Sam. Is this a hard bargain they're driving, or do you think this is quite genuine?
Oh, I think I think it's both. I mean, I think they are genuine. I mean, if they can't secure a power offtake agreement that enables them to make a margin on that, then they 100% will shut it down. And making the various stakeholders in this agreement aware of that, I think is more than fair enough. But it's this issue of power, which again we should be near and dear to our hearts in Australia, because our own smelters over here have been sticking their hand out on account of how higher power prices is not an issue confined to Mozambique. But I also think there's a bit of a weather component to it. Like I think whilst Eskom mostly gets its power from coal, there is a decent sized hydro component over on the eastern side of that grid there, and rain's been a bit light on. So it can just sort of highlight some of the sensitivity of these big industrial users to weather patterns, and hydro is not always reliable as you think it might be. But I think they really have to think long and hard about what they do there, because once that smelter shuts down, I mean, it'd be very unlikely that it would ever be restarted. I think it was Alcoa, I think it is, has a smelter up in Spain which got shut down when they had the big blackout in April. That thing won't be back up and running at nameplate until I think 2026. Like it's a huge amount of time to restart.
You've got to keep these things hot. Like they
100%. 100%. So, and that involves a huge amount of cost. So, I think if they do shut it down, it's going to stay that way. It's about 0.5% of global aluminium supply, so it will cause a little bit of a ripple there. But I do. Back to your point, I think they are genuine, and if they can't get, aluminium itself is basically congealed electricity, and the unit needs so much of it to make it. And if they can't get electricity at a reasonable price, well, that production's going to got shut down.
Yeah, I agree with you that they're serious. I mean, you even saw South32's playbook though when they couldn't quite get an environmental agreement for Worsley last year. They kind of cut. It came to a point where they came out and said, we're going to have to do a pretty substantial impairment on Worsley, because the environmental approval that we've had for the area of bauxite that we want to mine at Boddington is so conditional and prohibitive of what we want to be able to do that there's going to be a material write down. That disclosure paved the pathway in 7 months' time for them to actually get an approval that was probably met in the middle somewhere. But you've got to be public in order to get that kind of
Oh, that's right. And the miners don't want to go public. They'd be very happy for them to put their application in, early enough. And my understanding is they applied in 2017 for those mining lease expansions. So they gave the government heaps of time. Yeah. And if the answer was no, then say no. But this non-answer for what is that, 8 years or whatever, is ridiculous. Yep. So, if you're allowed to mine there, then say so. And if you say no because it's too close to the water catchment or whatever, then that's the answer. And then the company will take that on board and sort of move around it as best they can.
Also on the theme here of renegotiate, what's happening is South32 had a sweet power supply agreement at Mozal for a long time, and now that's rolling over, and you're facing the outlook of much higher energy prices broadly. This is a global theme, and even local to home a bit more. I remember when Alcoa acquired AWAC, and you could read in the scheme booklet there when they consolidated AWAC that AWAC's gas agreements that like they've got 80% of their gas supply contracted at the moment. That progressively rolls off between 2027 and 2032, and as they re-enter their gas supply agreements, a $1 increase, $1 per gigajoule increase in the gas price in Australian dollar terms nukes NPV by $2.5 billion. Right?
Wow,
That's what the independent technical valuation pointed out. Grant Samuel pointed out.
That's some spicy sensitivity.
So spicy.
That's why you see them teaming up with WESIes and the other sort of the companies that need the energy here in WA to rally against the onshore.
Granted, WA gas prices have tapered off a little bit since then, so maybe they'll be able to secure something that's appropriate over the long term there. But this is a pretty sensitive topic, and I know you have a lot to say about the gas prices and energy prices in general.
Yeah, I mean it throws the development approvals of other gas projects off the Northwest Shelf and elsewhere into sharp relief. Like, and Browse is the big one. Like, if that doesn't go ahead, then WA gas supply starts to look a bit tight. 5-10 years out. So, and that's not a project that you can just snap your fingers and turn on. So, when you've got largely the federal government sort of pretty hostile to approving that project, but it'll be to the detriment of WA if it doesn't go ahead. Yes, I mean I know it's CO2 rich, so there's emission concerns, etc. But it's not without substantial angst for the WA economy if all of a sudden our power prices start going up, and we're seeing that around the world. Mozambique's a case in point, but yeah, this power issue is everywhere, and you can't get away from the economic implications, quite dire economic implications of higher power prices.
Yeah, Mozambique and South Africa as well, just fantastic examples of poor energy settings over the past 3 decades, and the ramifications have been huge. So many other projects in so many industries become uneconomic, and this is like a huge deal for Mozambique as well, because aluminium's their 3rd biggest export, and for that that all comes from Mozal. There's no other smelter. That's entirely Mozal, and interestingly, electricity is their 4th largest export. So they're talking, because there's huge demand from Zambia, from the DRC, who are short energy. So yeah, they could repurpose some of the energy and sell it on, but there is a bit of value add as well in the aluminium, as well as a cost in transmitting that energy through the whole country up to other parts of the continent.
It's a big deal for Mozal. It's a big deal for South 32. Like, I saw that this was some analysts were wiping 30 cents off of their NPV. So that's 10% of their NAV just from the indicative curtailment of this operation. That's substantial to them.
And we'd heard people talk about, when is South 32 going to spin off the alley business, that the old alley supply chain? People made that argument 4 or 5 years ago, but that becomes a bit more mute in this sort of environment.
The rationale is still there though, right? Like, you look what the standalone aluminium businesses trade at on an EBITDA multiple. It's like, close to 10 times, and yet South 32 would trade at like a 4 or 4.5 times.
Yeah. All right, we got one more sick deal to speak about, which I'm pretty pumped to talk about. Mitsubishi and Hudbay. This is a really interesting deal. So US $600 million is what Mitsubishi is paying for a 30% stake in Copper World. So we're talking Arizona Copper. This is a prospective project, not yet built. So stage 1 outlined 85,000 tonnes per annum of copper production over a 20-year period, and stage 2 would encompass federal lands being utilised, and that can lift the copper output. But it's cool for a number of deals in my mind. Firstly, it's done at a premium to NAV for Copper World that pretty much every broker had. So that's a boon for Hudbay. It then reduces and defers the CapEx that Hudbay were going to have to spend. So it pushes out what they were going to have to spend, and it reduces it to the tune of about $200 million now, at the earliest 2028. And you've lined up a super well capitalized partner in the Japanese in Mitsubishi. So I think it's little surprise the stock's up like 25% over the past week. I'm not sure if you had your chance to sort of sink your teeth into this one, Sammy.
It's an excellent deal for Hudbay, and the fact that the Japanese have decided to invest in the US, where I think there's probably a clearer path to permitting, get that mine up and running now, would be certainly part of their consideration, and also secure of I think because did it come with offtake agreement for their pro rata share?
I couldn't find that specifically in the wording, but I would assume that Mitsubishi is going to take it all and do it in country as well. I would imagine too.
Yeah, I mean, copper concentrate is rare as hen's teeth at the moment. I think still like spot TCRCs, so what the miners used to pay the smelters to treat their concentrate, is actually negative. The only way that these copper smelters are making any money is off the sulfuric acid which they produce as a byproduct. So, the fact that you've got a big trading house like Mitsubishi willing to pay overs to secure copper concentrate, I think is indicative of the view they have of the supply demand balance going forward.
Yeah. So stage 2, if they make that decision, would involve the building out of an SX-EW facility to make cathode. But for all of stage 1, there's more con in the market when it gets to that point.
But Hudbay is a $6 billion company. Last week it was a $5 billion company. Like, this deal added $1 billion in market cap, which is extraordinary. The funding requirement to develop this isn't a tier 1 project. This is like tier 2 at best, And the funding requirement goes from 1.3 billion down to 200 million that Hudbay has to come up with modest project finance in there. It's only like 350 million. They've put a stream in there, but they've retained 70% of the project level economics. It's remarkable, and because of the project IRR goes from 19%. Now, yes, there's debt, so this is a levered IRR, goes to 90%. That's like, this is one of the rare deals that pop up, and you're like, the financial engineering geniuses have actually created shareholder value. Like
19 to 90.
That doesn't always happen, mate. It's like it's a wicked deal.
It's excellent, and I mean, more broadly, I mean, the Japanese have shown themselves to be fantastic partners in the commodity industry for decades and decades and decades. So I think that is a big tick, but also it follows on from a raft of copper M&A we saw. Was that last month or the month before, where we saw Xanadu, Mac Copper, and New World all get bids. So the corporates are moving here ahead of I think a big spike in copper price, which has sort of been flattish recently.
Yeah, I think you can call the Japanese trading houses the kingmakers when it comes to these porphyry, and not just copper porphyry, big scale copper projects, but they've done a fair bit of work in coal throughout Australia as well, and like the iron ore deal they did with on Rhodes Ridge a couple months back as well. When they come in, the de-risking and the long-term mindset that they have is just a phenomenal boon for a lot of these projects. They're such a good partner to get along, and there's not a big sort of splash about it made, but it's been happening for the better part of 50 years now.
It's all cost of capital, isn't it? It's like they can borrow at 0% or negative, and
thanks to Japan's own challenges.
And what an impact it has to someone like Hudbay had pretty substantial cost of capital, but you apply like 30% of the all this project funding that's like 0% cost of capital, and what does it do? Like, Hudbay's the beneficiary of that when they're introduced as a partner at the project level. It's remarkable.
Oh, that's a core point, and people often forget or overlook the fact that without these international finance or companies coming in and investing in these projects, a lot of them would have never gone ahead, because the cost of capital for these smaller companies is just prohibitively expensive to finance these things into production. So 5-10 years down the track, I'm sure Mitsubishi does very well out of their investment there, but you can't overlook the fact they were willing to stump up a huge amount of cash when this project was basically an idea on paper.
Streaming is the other point on that one. Are you a fan?
I prefer to avoid it if I can. I mean, it's sort of another form of royalty, and it can and often is an expensive form of financing, but if that's the only offer that's on the table and it's that or nothing, well, that's you got to take it if it's there.
Yeah, It has its. I'm increasingly coming to the view that it has its place. Yeah, I do think like, and the example I do think of is Bellevue, had they done project finance with a stream instead of the project finance package they came to market with
the hedge book.
Yeah, they'd actually have alignment and like as their expectations being reset, and I think the equity would be a lot higher today.
Yeah, I mean the 2020 hindsight on the hedging that was
was
imposed with that debt, which was standard practice at the time. But I mean they weren't the only ones that got stuck with a nasty hedge position due to taking on debt at that particular point in time. But unfortunately, the production undershot, and so that hedge book was all of a sudden a bigger problem than it would have been.
Just one last interesting detail on the stream there. They tweaked it they're looking to tweak it. It hasn't completely gone through, but they don't want a flat fee for the precious metals that they're going to sell. They want to get 15%. So there's a small bet on precious metals continuing to rise. So they wanted us to sub that one out, which was an interesting quirk. Mate, we've just unpacked some big stories with regards to energy, some of the biggest companies in the industry, and deal making. All those things together make me think of one company, mate, and it is Axis Mineral Services.
Axis Mineral Services. I don't know where you're going with this one, mate, because when I think of Axis Mineral Services, I think of turning rocks like this, big rocks, into little rocks. That is what they do.
They're the crushing experts.
That's what they're known for. They've mastered the skill of crushing big rocks into little rocks.
You can pretty much go and ask anyone who operates a gold mine in the gold fields, have Axis done great work for us? And the answer will be yes. And they are expanding their horizons now. They're going up north, southwest, southeast, anywhere you've got a project, they can bring a mobile crushing solution to you.
Not just mobile crushing solutions. That's what they've done in the past, mate. Now they can also do these semi-portable big crushing units that you don't even need to fund the capex for. Imagine the whole front end of the plan. Axis Mineral Services via a build, own, operate model can actually make that happen for you to reduce your upfront capex if you're building something funky in a new place.
Bit of civil works, lay a strip.
You know why? Because they're now backed by Rawbex Construction Group. That is that's huge. That's huge.
Firepower,
big balance sheet,
and they're also bolstered by none other than Jason O'Rourke.
Jason O'Rourke, he's the COO, industry veteran, mate. Jason was happy to see everyone at Diggers. He said, "I said hello to people at Diggers. It was good."
There we go. If you need crushing solutions at your mine site, get in touch with Axis Mineral Services.
Turning big rocks into little rocks. Also sorting the little rocks out if you need that too.
All sorting.
And also now that there's Rawbex, they can do civils and everything.
Engineering.
And also
got the know-how, mate.
Nothing's too hard. It's turnkey. Turn your keys. Turning back to Sammy B. His first new segment, it's called Grade Control. Like maybe the name needs some improvement, but I kind of like Grade Control. Basically, we've all got to give a letter A to F. Like we're grading things, right? To a major corporate move, or it's a government policy, or it's a commodity trend from the week just gone. Explain your reasoning. Hopefully we have a bit of debate in the process. But to kick things off, what's your grade of Greatland's guidance that came out and reset expectations a bit lower than where the prospectus was?
Yeah, I mean, in isolation, it probably wouldn't have been so bad if they hadn't given guidance a few months beforehand. I mean, that's, things don't move that quickly, I think. So, I'll give them a D, and it's a struggle because, when you're building your model and you don't have access to the data room, I mean, you're basically relying on management's guidance of, what they're going to produce, next year and the year after, but also you get a bit of a steer on, what the project should produce out in time. And if it turns out those numbers are wobbly, well, yeah, I mean, you've got nothing to base your sort of your forecasts on, and it all becomes very uncertain. And the more uncertain something is, the lower multiple it trades on, and that's what's happened.
Trav, your rating?
Mine's an E. But
I think this will be a theme to continue.
I read the please explain, the ASX. thing,
Yeah.
I was like, some of that left a little bit to the imagination. So it's an E. Like they can still improve from an E. You can go from an E to an A if you just deliver. But
I've got a D. I think I find it hard to believe they would not have known a couple months prior, and they would defend that vigorously.
Mate, you can't say that.
Yeah. All right, next one. Jakob Stausholm's farewell tour.
I mean, it's going better than Alan Joyce's farewell tour. I'll give him credit for that. I mean, I don't understand what these farewell tours for these high flying executives is often just the launch pad into whatever next role they've got their eye on. But one thing that did I did come across a comment of his from his roundtable with the sell side. I think that was yesterday or the day before. Was that the difficulty in operating in Australia, due to rising costs, labour, permitting delays, et cetera, et cetera. I mean, Rio obviously might have, created a problem of its own making with its permitting issues in the Pilbara after they went and blew up that Juukan Gorge. But that's one thing that's come out, again, a global miner, suggesting that things are getting harder in Australia relative to the rest of the world. And it's, it was an innocuous comment, but it has far-reaching implications, I think, when it's being, repeated by other people in the industry.
Yeah, I'm going to give him a C. He's making some noise. I do think Jakob was probably the right person for Rio at that point in time. That point in time when he came in, Rio's biggest issue was Juukan Gorge, and he addressed that. But now he's I do believe the critique that he's kind of let that become the overwhelming kind of cultural identity of Rio is this sense of guilt and self-loathing that's perpetuated since that event. Rio's biggest issue right now is not Juukan Gorge or anything like that. It is what's actually happening in the Pilbara, like the grade decline, the inability to get things developed on time, the costs that are growing there. I do think that's their biggest problem.
Yeah, I agree.
I'd push back slightly. I'd give a B because I think a lot of those things are right, but they are in part a ramification of what happened 5 years ago. So, yeah, it's hard to say. And this farewell tour has been going on a few weeks, and there's been loads of really interesting nuggets that have come out of it. One was on the importance of good energy settings across the country, and that was said in the context of Tomago in New South Wales, which is at risk of being uneconomic as it sort of stands. So there was a few really good bits of information that came out. And I think the media framing around the words that are said by an executive can always be a bit sort of confused. So I sort of read some of the titles and then read what was actually said, and it didn't always kind of marry up.
Yeah, I was going to say that point on energy is a good one, and it's relevant. And I've got a bit of sympathy for how these major miners sort of position themselves in their sort of government relations versus their public relations, and that I understand that they need to have a functional working relationship with whatever government is in power, and so you can't be too critical. But then when you had Tomago, I think, come out and said, we've just signed a power purchase agreement that's taking a huge amount of wind and solar energy, and this is going to power us through beyond 2028 or whatever. And then no more than, I think it was a couple of months later, a month and a half later, they're back in the paper saying, well, they need billions of dollars from the government to subsidise their existence with this PPA in place. And so they would have known when they signed it that it was probably at a negative margin for based on their aluminium production. But can you be a little bit more upfront than this, upfront with this, and sort of avoid some of this mixed messages that go out into the media about what exactly is a reasonable power price and what is a reasonable power solution for this heavy industry, which supports so many jobs around the place.
Absolutely, and it's an international industry, right? It's got to be internationally competitive.
Yeah, exactly.
Next one is the SYA Piedmont deal. So there was a shareholder vote that was held by Piedmont. They couldn't get the 50% required PLL votes because there just weren't enough people voting.
Not that they didn't get the required, they couldn't get the people to vote.
Yeah.
What do you reckon?
It's been extended, I think.
Well, I mean, I'd have to have a good look at their register. I mean, I sort of had a glance, and I could, it's a bit bizarre that they just couldn't, get people incentivized enough to put pen to paper. But if it's a largely retail investor base that probably stuck this stock in their back in the bottom drawer somewhere and haven't looked at it since. I mean,
they don't want to look. It's painful to look at it.
Well, that's right. It's a tax loss that they haven't realised, and I can sort of understand how it might happen. But you can't. I don't think you can stick things in the bottom drawer anymore. I mean, that adage has been proven incorrect time and time again. So if people are, looking a gift horse in the mouth, and it's a frustration. But I don't know how they change it. I mean, unless they go, cold calling people, from the shareholder register individually. I mean, what do they do?
I think making the process of voting so much more like user friendly is such low hanging fruit. Like it is still a cumbersome thing to vote your stock. So yeah, and if you're trying to appeal to retail people, like simplify that. Get some UI expert to just like cut out all of the crap involved in voting. Just
The
click a button on your
Xanadu,
phone.
the Xanadu thing, they issued a check. Like,
Yeah.
is this 1955? Like, I don't even know what to do with the check. Blows my mind. This one, I'd give it a sort of a D, and that's not to the company, that's to the shareholders. Like, you're the owners of a business here. Like, it hasn't gone great, and maybe you want to blame management for that, but this has gone on for so long, this takeover. Like, this has been 3/4 of a year at least or something.
Oh, it's where your friendly fund manager can come in handy, because we look after all that paperwork for you.
Yeah.
Exactly. There you go.
C from me. Next one, Australia's rescue package of Nyrstar.
I'll give this an E. I mean, it is ridiculous that, we adopt an energy policy that makes energy more expensive. You need to subsidise the producers of this new energy so that they're profitable. But in doing that, you therefore also have to subsidise your incumbent energy producers, because their margins get hit periodically. But you can't have them leave the grid, otherwise it all fall over. And then you have to subsidise the people that use that energy to keep them in business. I mean, we've just had the RBA come out and talk about productivity. I mean, this is a productivity killing zone, this sort of negative feedback loop of subsidy after subsidy after subsidy. And it can't go on. I mean, this will drag the country down if it's not nipped in the bud at some point. But, do you want, once this manufacturing does shut down, is it ever going to come back? Probably not. So you got to save it. But it's just so regrettable. And the fact that it was so foreseeable is also regrettable.
Trev?
F. Massive own goal. Like and the frustrating thing for me is, like, this sets the precedent. There's every smelter in the country is going to need a handout. By the way, it's not a once-off handout. This thing's going to be a perpetual motion machine of handouts, because there is no short-term solution here. No. Like, this is a long-term problem, and now we've made a commitment to subsidise an uneconomic reality as a result of just a big own goal.
Yeah, and so, I mean, how does the government differentiate between, the smelter that's going under and the employees there versus the guy that owns the bakery down the shop, who he goes under because of power prices, but he's not big enough to be saved. Like, there's it's just very, very inconsistent in terms of who gets the handout and who doesn't. And you're dead right. Like, when these things go negative margin, the revenue and the cost line are in the hundreds of millions of dollars. So, once you go negative, you end up in big bucks very, very quickly, which is why these sort of one-off sugar hits is a bad idea. They need to have a look at the underlying reasons and address them. Yeah,
I really agree. Port Pirie alone is losing in the range of tens of millions of dollars a month. So a $135 million check is, I think I saw, going to keep them sorted until early 2026. This is a Band-Aid fix on a serious, serious problem. And the idea that you're going to let them run this study to see if they can produce gallium and bismuth and antimony to Trafigura, like, of all people, that's who owns this thing. And there's no mention of repayment. This is just a handout that goes like that. Like, I really do grapple with actually rating this one, because I also, on the other hand, don't want to end up in a situation where China is the only one that can run the downstream on every single metal in the world. So it is a complex issue, and this is not a well thought through solution to that problem.
No, I don't think they want to admit what the underlying problems are. So it's Band-Aids all around until we get to the next election, and then we kick the can down the road a bit further again. But you're going to run out of money at some point.
Yeah, and the paying for vote type element to this, because there are a lot of jobs at stake, is an incredibly slippery slope. And I mean, it's been something that's happened for many years and decades in other regards. But because there are thousands of jobs at stake here, the government feels that that sort of inkling to write a check, that's a sort of very damaging part of it all.
Yeah. Next one, there was news in the FT that Barrick's pursuing $3.5 billion in debt for Reko Dick.
I'll be interested to see whether they get the debt and what the cost of that debt is. But they're only like 40, 50 Ks from the border of Taliban country up there.
They're quite close, yeah.
Yeah,
it's quite close.
So I mean, I must admit, I haven't had a good look at the economics of that project, but it would want to be an absolute cracker to sink cash into that part of the world, I think. But I mean, I think it's CapEx is like roughly 10 to 12% of their market cap or something like that. So it's a big swing for Barrick.
They previously disclosed that there was going to be this minority project sell down had been earmarked with up to 20% to go to Manara Minerals, which is the JV between Ma'aden and Saudi Arabia's PIF. And it also in that article, it basically said Manara couldn't get over the line. Now the question I have is, if Manara couldn't get over the line, like these are the Saudis, and this they couldn't get over the line, like. It does give me a lot of doubt about the ability to operate in that part of the world and the huge amount of the company's capital that has to be diverted to build this project. Debt is still capital, like that's still your capital. Even if, so that's a I think for me this is a D, because I also do think the activist opportunity for Barrick is very much alive. There's a real opportunity, like breakup opportunity here, diversion of capital. Even the chance to separate your developing country copper growth assets in one, and then you've got your US gold in another. Like it's very Nevada gold mine focused. Those are alive, and Barrick's if they continue on this path of questionable capital allocation, like I think will find themselves at the mercy of the activists like Elliott.
Well, I mean, if you're a prospective debt lender, I mean, you'd want to ask some questions about their sort of foreign relations policy with regard to Mali. I mean, I don't think they just took $1 billion write-down on gold mine that they just lost there.
Yeah.
I mean, that situation I think could have been handled much better. So, things are going to be different in Pakistan.
To your point on being pretty close to Taliban country, I remember we spoke about this a few months back, and I think one of us made the comment that it's about 100 k's from the border or so. And somebody sent through a photo. It's a whole lot closer than that. It was a sort of turn off. I think it was 40 odd kilometres from the border there. So it's a spicy sort of jurisdiction. Stage 1 capex is US 6.6 billion. They haven't updated these numbers in a little while, but 6.6 US. And given the ownership, they were talking about Barrick doing about 1.5 billion, Pakistan government doing about 1.5 billion as well. And then looking for that 3.5 billion in debt funding, with the specific sort of earmarking that it would be development bank financing and also limited recourse financing. Now, we'd see if that actually sort of comes to fruition, if they can get anything like that over the line. But the one saving grace, if you do get development bank financing, is that they can really impinge Pakistan for what it's worth on its sort of economics as a global lender for the government of that country. So, yeah, we'll sort of see if that all kind of comes to fruition. But I think, like you said, Trev, that breakup play is, I think there's a bit of legs to that one. And, yeah, to what you said, Sammy, there's a bit more water to go under the bridge in Mali as well there, which is...
I'd say so.
Yeah.
Next one is, I don't know if you caught this, but Sunday night in Australia, 60 Minutes aired some segment on Greenland rare earth investment, and then this stock on the ASX energy transition minerals, like one point I looked at it was up like 123% on Monday.
Well, I think I read through the please explain afterwards, like they were quoting in situ value of resources as a means to fluffing up the value of their project. I think that's probably what it caught a few people's eye, but I mean, so what? Like, the in situ value of gold in the ocean is probably billions and billions of dollars, but you can't get it out economically, so who cares? Like,
that's a good starting point.
Grade control, is it an F?
Yeah.
An F for 60 minutes?
Well,
I reckon it's an F for 60 minutes.
Yeah, I think so. I mean, it's not hard to sort of, get some context from someone. It only takes one or two phone calls, and I would have thought the reporter or whoever put the story together might have, got a bit of colour around, what's the right way to be framing this project. But then if you knock a few zeros off the number that they were quoted, then perhaps it's not as interesting.
I think F is a pretty suitable rating for that.
I like it. All right, mate, we've got another segment for you. This is this one's called Sweet Deal or Sour Deal. Going to rattle through 3 different sets of deals this week, and just rapid fire if it was a sweet deal or sour deal and why. The first one, I'm just going to group all of the cap raises. There's been so many cap raises. It's been a cap raise week. Like Santana, 60 million, Benz, 30 million, Waratah, 30 million, Centaurus, 23 million, Falcon, 20 million, WA1, 100 million. And that's just like the ASX ones that were like above 20 million, right? North America's had plenty over the last week as well. But just the group of cap raisers participating in cap raises this week. Sweet deal or sour deal?
So there's some real standouts in there. Like that Benz deal was an absolute cracker. I mean, so for that stock to have run as hard as it did and then raise at a nil discount to last, well done. But I think it's overall, like the commodities sector has sort of been grinding higher for the last couple of months, and I think, with interest rates generally coming down, it's supportive of the sector. So hopefully, on balance, and I know I didn't participate in all of them, but I did in some. Hopefully, it's
which ones did you participate in?
I have to remind me through the list.
Santana?
Nah, Miss Santana.
Benz?
Benz were already there, fortunately. So
Waratah?
no.
Centaurus?
No nickel.
Yeah. Falcon?
Falcon, I think we did.
Yeah, WA1.
So WA1's interesting one. Like, we look closely at it, but we're have a small position in Encounter, which sits around WA1, which is, I think, also interesting, and probably more so after they've raised the amount of capital that they did.
Ding, 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 WA1.
In the context of what you sort of said there, Sammy, I think it's a sweet deal. I don't think we can have that sort of argument that the capital isn't there for a bunch of miners at the moment. Like, if you've got a half decent type project, you're getting financed, and they're not like tiny raises. Like $30 million, you can do a fair bit of work with. So I think from an industry type perspective, it's not a bad thing in the context of a lot of frothiness in broader markets right now. So I wouldn't be sort of jumping to participate in every one, but from the company perspective, not a bad thing.
Sweet deal for all, I think, because this is the phase of the cycle where being in deals is like everyone wants to be in deals as well, because the deals are actually not necessarily strictly drifting back to the offer price. There's a day one bump in more than 50% of the cases. So I think it's a sweet deal for all. The share prices of these companies are at elevated prices. They're doing them at local highs instead of at 12-month lows, and the participants are getting rewarded in the short term immediately afterwards as well.
Yeah, no, I think that's right. And I think whilst most of those raises were in gold, and sort of the gold sector is a bit frothy, but these companies are making money, and I don't think, broadly speaking, where the industry's wasting money. Like, it's not like it was in 2012, 11, 12, things like that, where I think it was just absolute euphoria. I think, generally speaking, the money that's been raised by those companies is being put to good use, and they're legitimate projects that are being advanced. So hopefully it works out well.
I said local highs, but the exception there is Centaurus, and I actually thought this would have been an interesting one to participate in, because it came with it was it's undemanding price. So, and it came with this free attaching option for every 2 shares. So it was the incentives were there to participate if you did, but it's at the expense of the existing shareholders who will experience the punitive dilution. But that's nickel, right? Which leads into the other deal I wanted to talk about and get your opinion on, if it was a sweet deal or sour deal. Lifezone. Don't know if you follow this one, but they've got the Kabanga project in Tanzania. It's along with Jaguar, one of these still quite high grade, interesting nickel sulfide projects. BHP was at one point, when they were still in nickel, pretty interested in this one, right? They announced a $60 million secured bridge loan with Taurus. And effectively it's a bridge loan. What are they bridging to? Well, they're progressing towards FID. Ordering some like long lead things, but they're running a strategic process to bring in a strategic partner at the same time. Sweet deal or sour deal?
I think I'm tentatively to say sweet deal, as long as it works, because the Taurus bridging debt wouldn't have come cheap, and if they don't have something to grab onto at the end of that loan, well, it's going to be very, very expensive for them. But it's. You'd hope that they already had their eye or a reasonable conviction on one or two strategics to, get them out of trouble. Yeah, at the other side of it. And I would have thought that was the case. Otherwise, you'd be a bit risky to do it. And also in nickel, it's certainly an unloved commodity at the moment. You wouldn't want to be starting fresh. So, as a means of avoiding dilution and on the assumption that they've already got their eye on a potential strategic partner, I think it's might be the right idea.
Yeah, the bridge has got to get you to the other side, and you can't just fall off the other end. So there's got to be something firm there, otherwise they're going to have a lot of egg on their face. But yeah, really interesting. It was only a few months ago that BHP finally said they're going to walk away from this one. We're in a completely sort of hated space, so it's an interesting time to kind of participate in these types of companies and be involved, albeit nickel is in a particularly interesting part of the cycle.
I hope it's a sweet deal. I'm worried it's going to be a sour deal. Like, it all depends on if that's bridging to an outcome or not. But I'm sure everyone's done their DD here. But you know me, I'm just cynical.
You'd have to have faith in the board that they're not rolling the dice on a strategic weighting at the other end of that rainbow. Because if it's not there, it's going to be painful.
All right. Last deal, sweet or sour, the Peabody-Anglo coal deal. This one has also been in the works for quite some time, and it feels as if, you know, D-Day is pretty imminent. Rating this one is kind of hard, but have you got thoughts on how you're thinking about this deal many months later?
I've just got real sort of I suppose sympathy for whoever the analysts are that have to assess the value of one that caught fire, and then that's complicated the deal. Yeah, like how do you? Because I mean, don't have any insights into what the situation is, you know, underground, whether or not the fire's out and it's all been sort of contained. But you know, these issues when they pop up can take a very long time to solve. And if you're in the middle of a sales process, then trying to quantify the cost and therefore the value and what you pay, and then you know the competing sort of sides of that. It's difficult to do, but I think if Peabody ends up getting it, I think in the fullness of time it'll probably turn into be a sweet deal, because I mean trying to get these mines permitted is near on impossible. So you know it's the incumbent producers is where you want to be, because getting additional supply up and running is so tough.
I think it's I mean the deal's still in doubt in some ways. There's Peabody saying it's a material adverse event, Anglo saying it's not. Peabody's share price has gone from as low as like $10.50 when everyone was worried about how they're going to fund this thing, back to $18, and now they're actually in a position where they could fund it. I think they've got to I think their earnings is on the 19th, and they're going to say what's going on here. But I feel like there's an opportunity to do a sweet deal, reprice it. Anglo probably will reprice it lower because what's the alternative for them? Like the quality of, they're not going to get the same price. The quality of these assets has absolutely diminished since they started the sale process as a result of what's unfolded.
As well as the coal price just peeling up.
Yeah, all of this stuff. Now, I wouldn't if I was Peabody, I'd try reprice it at something that's actually just a reasonable thing, where it's not so onerous to fund it, and your share price is where it is right now. And I'd even I wouldn't even care if Anglo wanted to shop it around. The rumored second highest bidder in that process was M Resources in consortium with their various funding partners. If M Resources wanted to pay higher, so what? You're kind of you're half in, you're half out. You're saying you don't want it. Let someone else overpay if you think that what fair value is. And Anglo's, who else is Anglo going to sell it to? They're going to sell it, and you can probably reprice it and just settle all of the legal shenanigans that would go on if you're trying to argue for material adverse event, and just reprice the deal. And I think it can be win-win.
Yeah, I think that's well captured. And again, the Japanese, they're saying they will buy big stakes in the assets themselves again to support the deal to get it through, which is part of the reason we've seen the Peabody share price rebound, because they have that support, which was the big worry that saw them, I think, over more than half on the back of doing this deal at what turned out to be a bit of a high point in coal prices.
Last one for you. So I mean, this is our last segment. Big brain, small brain. We're calling it for now. Might change that. But,
all the names are iterations that can be worked upon.
Yeah. So each of us just get the opportunity to share the smartest and the dumbest thing that we've either done or seen done this week. And yeah, I can start if you want me.
Oh, I was going to say, I mean, as referenced before, the smartest thing I've seen this week is that Ben's deal. Trying to, getting that away. I think as all the other mining executives to have a look at what can be done. I suppose if you scour the earth for capital and find it at at a reasonably cheap rate. That's something special, that one.
The small brain.
My small brain thing is probably not participating in the Liontown raising for a quick turn. I thought about it, but generally speaking, we're not traders, but yeah, it's there was an opportunity there for a quick turnaround, but didn't take it, unfortunately. So left a little bit of money on the table.
Trav, big brain, small brain. What do you got?
Big Brain was it was actually just like watching the Diggers things, like a live stream of them, as opposed to going to Diggers. Like my health was in far better nick, and I could follow things that were happening across all the companies pretty succinctly, and I could also just touch base with people who were there. So that was the Big Brain thing. Small Brain, just not using my calendar, mate. Like it was Wednesday. Get a phone call from Mum in the evening. She's like, "Oh, you coming with me to that funeral at 2 p.m. tomorrow?" And I was like, "What funeral?" So anyway, just using my calendar, using my calendar when I first hear about something.
Shocker. Yep. I had one outstanding howler over the past week that outshines all work-related ones, but got a pizza out of the fridge on Saturday. It had been there a couple of days longer than I might have thought it had. Reheat it and feel shit all Saturday afternoon, so I can't look beyond that one. Big brain side of things. Premier League season is starting tonight. I've got Stan Sport sorted. I'm good to go. So a big 9 months ahead that I'm very pumped for to see Liverpool win the league again.
Beautiful,
but
mate.
I'm saying this to a completely non-soccer audience. It's falling on deaf ears here.
That was a lot of fun, Sammy. It was What did you think of this format? Did you enjoy it?
I always enjoy a chat with you guys, and I mean it's there's quite a lot of breadth. I think we got through today, international and domestic. So a few political sort of angles in there too. But it's always enjoyed a chat, and you guys are always very well researched as usual.
Did you? Was there anything you wanted to talk about that we didn't talk about today?
I mean, I think it's this power policy thing, which is sort of an ongoing bugbear of mine, particularly in the light of the federal government battery subsidy, which, if you haven't had a look at this, you should, because it's free money. Well, it's free money from other people who pay their taxes. But the federal government's giving you roughly 10 grand off the cost of a 20 kilowatt hour battery for your home. And I was just looking at some numbers which one of the sort of regulators put out yesterday, I think. Roughly a 4 to 5 year payback if you also participate in the the various government schemes, but you still need circa 10 grand of your own money spare to make up the balance, the bit that the government doesn't subsidise. And not everybody has that sort of money lying around, and that's assuming you've got solar panels on your roof already. So a great win for for those that can afford it. But if you can't, unfortunately, you're going to be more exposed to rising power tariffs as the network charges, which used to be paid by the people who didn't have solar panel on their roofs or did have solar but still tap into the grid for when the sun goes down. As they're not using the network, they're also not paying for it, but the cost still exists. So they end up being borne more and more by the people who don't have solar and don't have batteries. So it's not really fair, but that's the situation. So if you do have the cash lying around, I recommend having a good look at it.
And on the theme of buying votes that we touched on earlier, this one was announced 1 week before the WA election, I think.
Yeah. It's a winner. I think there's a WA subsidy on top of it as well, but it's for the reasons I just pointed out, like it's become such a sensitive topic for the people who have sunk that capital into their own homes that the government would be very reluctant to touch it. But it's making the power grid very regressive, I suppose, and it's for something that's a need, it's a necessity of life, an absolute human staple. I think it's the path that we're on here is not great, and it probably needs to change. But nobody who's already enjoying the benefits of government largesse is going to give them up willingly.
Absolutely, mate. Well, I think that's a great place to round up on and let people reflect. Mate, we've got some fantastic partners. We've got to thank, in addition to thanking Sam Berridge for joining us, Axis Mineral Services, mate, crushing services for all your requirements. Sandvik ground support, mate, the best of ground support there ever has been. Africa Down Under, join JD and I. We're going to be there from the September 3rd to 5th. You didn't know that was an ad, did you? Down Under. And also Focus by Market Tech. That's a wonderful platform right behind Sammy's head.
Check them out.
It's a wonderful mining user market needs all in one platform. Got a 10-day free trial in the show notes.
Hoodaroo.
Hoodaroo.
Thanks, guys.
Now remember, I'm an idiot, JD's an idiot. If you thought any of this was anything other than entertainment, you're an idiot and you need to read out a disclaimer.